MyStockScanner Live, powered by the 3-Point Playbook. Every day we cut through the noise, we break down the headlines, and we run the stocks that matter through three simple questions. Is it a quality company? Does it have an upside? And is now the right time to buy? It's always smarter picks, more confidence, less stress. And these two guys are the examples on it. Less stress, Liam Flavelle, Hans-Henrik Nielsen, even though that I can see that Hans-Henrik has taken his name and changed it into Liam Flavelle as well. So, well, it's a duopoly day, but that's good for all of us. Liam, welcome back to the show. You've been away on vacation. Good for you. We see the tan, and we're not going to talk any more about it, but we're going to talk about the 3-Point Playbook portfolio sits at 4.9% after a single buy yesterday. Are you a happy man that we took care of it while you were gone? And then he needs to unmute himself so we can hear him as well. It's really...
You're not going to let me forget that one now, are you?
No.
Anyway, back to the question. You looked after it very, very well. I'm very proud of you. You did an okay job.
Okay, thank you so much. Did you hear that, Hans-Henrik? We did an okay job while he was gone.
Yeah, there's something with my sound here.
Yeah. Yeah, the gratitude was overwhelming. Welcome to the show. We have a packed one for you. Bank stocks came back yesterday after it ended last week on a low. There's still no bottom in sight for DSV. It dropped 3% yesterday and is not looking too good today. Gold went briefly below 4,900. Silver went to 72.5. There's a new year in China. Does that have anything to do with the lull? On Friday, we might get a decision from the Supreme Court on tariffs. Could it move the markets? We're going to get into that. And is there any correlations between luxury stocks and AI jitters? We will take a look at that as well. And it's Tuesday. Liam is back. That means that we have Tech Tuesday. We are in a full-blown software crisis if we look at the stock prices at the moment. So what does it mean? Is there buys out there? We will get into that, along with questions from the mailbag from a rookie investor that asked about Grab, and another investor asks, why did we exit MICRON? We have number of today, 16,492,000 US crispy dollars. We're going to talk about those. They should be in a bank account, I think, somewhere. And talking about banks, Hans-Henrik, Friday saw a sharp drop from some of the European bank stocks. It all came back on. Some of it came back yesterday. Is a crisis averted in bank stocks?
There's not really a crisis. It was a bit of all this AI, oh no, logistics, oh no, insurance brokers, oh no, whatever, when a karaoke company can make the entire industry go down. So no, there was absolutely nothing to it.
And since we're talking to karaoke, you're of course referring to an algorithm company that went into the transport business. Formerly, they did karaoke machines, and they brought down DSV by more than 10%. But Hans-Henrik, what's the deal? It keeps dropping.
Yeah, to be honest, I'm not sure. DSV is quite a good company. We can see it here. It did drop Thursday here, and I think it's finding a bottom here. It's important to say we are using both our moving averages and our support areas. If it drops through here, even though we think it's a good stock, we will sell it. When we look at the 3-Point Playbook, it's a quite decent company. Their earnings per share have gone down for some years, but now it's like they have turned around their business. Maybe a bit to the expensive side. It's selling at a P around 50, so that might be a part of the reason that people are taking a bit of profit. But as long as it holds its support area, we just keep it, and otherwise we'll sell it.
Can we get into a situation where people kind of, are waiting for it to drop just a little bit more, and that's why the big investors are staying out of the market?
It could be. It's always hard to say. All the big investors, or some of them at least, they are also looking at these numbers. Sometimes they actually put an extra pressure downwards on the stock just to get the dumb money like us to sell, and then they pick it up cheaply down here and shoot it upwards. So everything can happen in the market.
Liam Flavelle back from Asia, and talking about Asia, it's Chinese New Year. That means that a lot of factories in China are closed. It means that they go back to the province that they come from, and they stay there for a couple of weeks because the commute is so far. But Liam, it also means things for the gold and silver prices. At least that's what we felt yesterday when it dropped below 4,900. Still a fairly big price for gold, but is that what's happening to the gold and silver market right now, that some of the buyers are on vacation?
It could be. I mean, China is a big part of the market, so yeah, that could be one part of the explanation. I suspect there's more to it than that. You know, we had a massive run up over here from May last year of how much is that? Some ridiculous number up to the top. 72% increase in a in an investment that doesn't make a yield, as people will say. It doesn't really return anything. It's a store of value at the end of the day. Yes, there might be something into it. I think it's far more about jitters around, okay, do we want to take some profits now and keep some of those profits in our pockets? You've got other jitters around the Federal Reserve, and are things getting better there with the new potential Fed chairman coming in? So there's a lot to go. However, you look at this, you look at this blue line, which is the 20-day moving average, and it's in the trend still. So it hasn't really broken that trend. It went down and then held to it. So there's no news here, I would say.
But can you always compare a gold sort of trend to a stock trend in that sense when you use the moving averages? Is that the same?
I think sometimes it's with these sort of commodities, it's actually more important to use the trends and technical analysis in here, because you haven't actually got much in the way of fundamentals to go back to. So in this case, with a stock, we can always look at the earnings, we can look at the debt, we can look at sort of the return metrics that we've got there, like we do with our playbook. There's no such thing in gold. So the trends and momentum are pretty much what drives the market.
Let me turn my attention to the coughing man in the background, because the thing is that I want to use him while his voice is still there. The thing is, we're talking towards Friday, because Hans-Henrik, you're always the guy looking forward to a specific date when things take place and stuff like that. I'll give you Friday. Supreme Court are going to go in session. Is that where we get the decision on the tariffs?
Well, don't get your hopes up. I think they have said that for a couple of months now, and they're not meeting up every day. So 20th here on Friday, that will be the next day they meet up, and then it's the 24th and the 25th next week. And there are rumors all the time. I think a lot of people would really like them to make up their minds and say, is this tariff war? Is it legal? Is it illegal? I have my opinion on it, but again, I'm not a Supreme Court judge. So if they could just decide and let us get on with our lives, then that would be pleasant.
But a quick question then, Hans-Henrik. What will happen if they deem it illegal? How's the market going to react?
Almost no matter what they do, it will be a bit chaotic. If they say this is illegal, then Trump will, first of all, he'll be extremely mad, and then he will start putting out other tariffs. He has some other different temporary things he can do. It will be extremely chaotic. If they say, oh, this is completely legal, then a lot of people will be surprised, especially because there's only a 25% probability in the betting market that they will actually say it's legal. However, that basically give Trump a completely free. Then he can do whatever he wants, because the Constitution basically says a president can't put tariffs on everything just by himself. He has to ask Congress. If Supreme Court says, nah, you don't have to, then that will give him completely free game. He can do whatever he wants then.
Let's see what the market does. There's no doubt that it's going to be a jolt to the market if they take a decision, no matter what way they swing. Talking about jitters in the market, here's one for you, Liam. It seems like there's a correlation between luxury stocks and AI jitters. Makes sense of that one for me.
There is. I mean, it's not like the AI is starting to make, handbags and things like that. Yeah, that's still the premise of 5-year-olds in Bangladesh that we get to make those. And unfortunately,
Wow, the sarcasm is coming down the walls here.
Unfortunately, if only it were sarcasm, but no. Effectively, what we're looking at is, I think, Hans, you've got a chart, haven't you, on sort of the correlation here, where we can see the movement in the global luxury, and then the movement in RK, which the ETF that tracks the tech and the AI. So we can see that when people actually make lots of money out of AI, they go out and buy luxury things, and when the AI is a little bit more dodgy, as it is now, and it's a bit more risk off, and people are looking for reasons not to buy, then the luxury goods suffer in that way. I mean, for instance, I can give you a really good example where actually, since the AI jitters have come in the last 3 or 4 months or so, I personally haven't bought a single handbag.
Great. I knew there was a reason why we missed you. Apart from the jokes, of course, Liam is our tech guy, meaning that he, of course, is back in excellent shape for the Tuesday Tech, and we can't get around it, Liam. There's a couple of new things that are making headlines. The software crisis on its own. Huge.
Well, this is where I was quite disappointed coming back, because you guys had 2 jobs. One of them was keep the 3-point playbook portfolio up, which you did. It's fine. Second one was don't break the market. And I come back, software stocks are going to not exist in 6 months' time. Insurance brokers are all going to be out of work. Logistics companies, who needs them anymore? And more banks and things like that. I basically did, we were talking earlier on, my sort of AI and my writing version of standing up in and shouting at pigeons outside now, because it's bullshit at the end of the day.
Did you call that the drop in all software stocks is BS?
Yes, I did, and the reason for that is when you look at AI, the argument here that people are saying, and the fear that's being driven to them by the people that are selling AI stocks, it's not the others. The banks and the analysts haven't changed their approach. They haven't changed their viewpoint on what the earnings are going to be for the software stocks, or the logistics stocks, or the banks, or the insurance brokers. What these guys are saying, CEO of Anthropic and people like that, is that in somewhere between 12 and 60 months, the AIs are going to be able to replicate any of the software that we currently have out there. So it's a company like Salesforce. Let's just share my screen very quickly. It's a software company. We know it. We've covered it a number of times. I think we probably lost money on it last year, except for quite a big drop. It's dived down here. You can see from the end of December down to here, it's had a massive drop in the market. However, when we look at the playbook, the analysts haven't changed their view on it in the last 90 days. They're actually up in the last 90 days. They're saying the stock's actually going to make more in earnings over there. The company itself is an absolutely fantastic one, according to the playbook. Pretty much everything is green here. Hasn't got a debt problem. Cash flow is great and growing. Earnings are great and growing. So we look at that and we think, what's the problem? And the problem coming in here is that the AI guys are going to be saying, why would a customer, if you're a customer of Salesforce, why would I buy Salesforce's software in 2 years' time? Because I can just get an AI to create it. And that's where the bullshit comes in, because I've been in IT for 40 odd years or so. I know the biggest part of an AI of an IT project is not the code itself; it's actually getting the end users to use it. So that's actually, the AI will not do a good job of that. Also, as MyStockScanner, we use a number of different products, like an accounting system. They put their prices up every 3 months. It's irritating. It's annoying. I'm not suggesting to us that we write our own accounting system because of that. So why would someone say, what do I really want the developers that need to babysit the AI to actually come in and and create our own software where we can just go to Salesforce and get it from there, and the risk is less. So that's one thing. The other side of things is that this is assuming that AI is actually any good. I was looking at some stats earlier on, some benchmarks. There are 2 key elements that we see, and we hear about hallucinations all the time. So the 2 key elements that I look at in an AI when we benchmark it is the factual statistic, which is basically, let's look at Gemini. If you ask it a question, how many times does it get it right? There's a benchmark study that I can put on the comments later. It said that it only gets it right 54% of the time, and it's the best model out there. ChatGPT was 42%. The second one is the hallucination rate. That measures of the wrong answers, how many were just completely made up. That's 88%. So somewhere around 40% of all answers you get back from Gemini is bullshit. And we're expecting, my example is, if you've got an accountant that gets it wrong 46% of the time, you're not going to use them.
No, and if you have a surgeon who's operating you wrong 46% of the time, you're dead.
That would be worse. Yeah, exactly. So just very quickly going through Salesforce, it's got a massive upside. At some stage when it bounces, it's got a huge upside. Marsh & McLennan, #1 broker in the world, they've got a huge upside. And the one thing I do know, I've been in insurance for 15 years, running tech companies, things like that. The people that you want on your side to do guerrilla warfare against not using a system are insurance brokers. They're like dinosaurs. They're brilliant. So there's significant upside. DSV, we looked at earlier on, significant upside. So these stocks, when they start bouncing, and I strongly believe they will be very, very strong contenders for huge gains.
See, the thing is that we are not at it alone. We also ask our users to help us out. So in our Tuesday poll that we put out this afternoon, we will ask which software stocks you believe will bounce the most. We will make some suggestions, but you are free to add in yours and we'll take a look at it, all of us. And talking about the Tuesday poll from last week, where we talked about Scandinavian stocks, we're going to take that up tonight as part of the webinar we have at 7 o'clock tonight. Liam Flavelle is at BAT at 7 o'clock. We're going to talk Scandinavian stocks, amongst other things. We're taking all your questions. Make sure to write us, FOMO@MyStockScanner.com. But for now, we have questions for the show. And I think that we're going to go to Hans-Henrik on this one, because we had a question from a rookie in investment, and we take questions from everybody. So feel free to write us. But Nana wrote us, I'm new in stocks. My first buy was Grab, based on some recommendation from one of her friends. I didn't know much about stocks. Was it a mistake that I bought it in this fall? Because I think it's down a lot. Hans-Henrik, what did Nana do wrong?
Well, not necessarily anything with the stock itself. However, what she did do wrong was she didn't have a strategy. So the fact that she's sitting now, and this is not just her, we hear this, 20 times a week. A stock has dropped, someone asks, what should I do now? And every time we say, this indicates that you didn't have a plan the second you bought it. And that is what we advocate. That is that you know why you buy it, how you pick the market, how you pick the stock, how you choose your risk on the stock, and how you choose your exit strategy. Because if we look at the stock, it is kind of a Uber Eats. They are bringing out food. They have some financial services as well. It's quite a wide range of services they actually have. The quality is not amazing, but that is because they have been running with the loss for some years. As we can see here, they have actually started making money, and it's a fairly good growth in earnings actually, and in revenue. The PEG ratio shows us we're not paying too much for future growth. We can see that the return on capital, meaning the amount of money they have available, of course, since they've been losing money, that have been negative, but again going positive in 25. Looking at the scenarios, the potential here, I know these PEs might be a bit to the high side, but even if we bring them down and say how much risk are investors really going to take on this stock, it's still, I know it looks a bit weird because the price is above the value graph here, but in the next couple of years there's a reasonably good potential here. The thing is, we don't have very much data to use here. We can't go and have a look at the sales instead, which also gives us a very good scenario.
Quick
So,
question,
yeah,
Hans-Henrik, in regards that you changed over to sales. What's the
yes.
difference between what you get when you get in and then what you just did?
Yes, we have mentioned it sometimes in the show the last couple of weeks here. Normally, we're using earnings because we do like companies that make money. However, there are different sectors, and that could be some software startups like this that actually shows a really good trend in earnings and revenue and so on, but where we can't really use earnings because they haven't had any. So it's hard to really measure when have the market been thinking this was cheap and expensive in the past. But they have had revenue, so they have been selling stuff. Instead of price earning, you can use price sales, meaning that you're saying how much money am I paying for every dollar they have in sales. And we can see here that back since 23 at least, it's like there have been a trend where market have thought it was expensive, cheap, expensive, maybe cheap here. So did she make a mistake? Well, that is hard to say. It could look like there is some good potential in the stock now. Looking at the chart itself, let me just remove that one. It is in a downtrend, so we wouldn't take it right now. But that doesn't mean she should go out sell it now. We're not giving trading advice in any way, shape, or form.
So far in regards to Grab, and I know there's always lots and lots more to tell, and as said, do write us questions. We'll try to take as many as them tonight on the show and tomorrow when we do it in Danish. But we have one for you, Liam, now in regards to a stock that we went into and we went out of. It's called MICRON. It's one of the, well, should we say, wildest rides that been in tech industry. It went straight up like a rocket, and then we dropped out. Why did we do that? And Yes wants to know, did we do a mistake?
It's not a mistake. It's part of the strategy, and we don't talk about it some of these too much. We need to do an exit sort of webinar at some stage again, because that's always well received. The company itself, as you can see from the playbook, I won't go through a full analysis. Everything is green on here, though. MICRON is a fantastic company. There aren't enough memory chips in the market, and there won't be for the next 18 months. So they've got a really good opportunity. From a valuation point of view, it's actually undervalued at the moment, so that's absolutely great. We dropped out here. So if I just scroll in a bit, we dropped out here. There was a drop of around 10% in the stock in one day, and it also gapped down. And that's something that we found in our testing a couple of years ago when we were looking at the 3-point playbook, was a really bad sign a lot of the time for these. It wasn't foolproof. No sign like this, no indicator is absolutely foolproof, but it tended to be a really bad sign that when something gapped down, it carried on going down. So that's why we sold it out of here. What the stock did was it bounced and then came back up again here. It had a 10% increase after that. So it's a stock that we could very easily go back into in the next couple of days. I'm looking quite happy and smug because I actually missed the call for it last week because I was sailing, and I'm still in it. So this is my smug face.
If I may add here, if I may quickly add, a lot of people, if we sell a stock and it turns around straight and goes straight up for the next couple of days, a lot of people are asking us, and that is absolutely understandable, was that a mistake? You cannot judge an exit strategy over the next couple of days. We could see that with, for instance, Rheinmetall, that we went out in, was it July or August? Then it went a bit down, then it went up, then it went down, then went up. It has basically gone sideways, up and down in a whipsaw. Yeah, if you find it there, Liam. It has done that for what, 3 or 4, 5 months now. So that exit, we exited back in July, I think it was here.
Yeah, somewhere, wasn't
and
it? Yeah.
If we hadn't done that, it would have been about a break even right now, but our money would have been tied up for 5-6 months now, doing absolutely nothing, where we could be in good growing stock. So that's a big part of the strategy.
And what you tend to find when the stock does dip below it's one of the moving averages, 50 or even 200, it becomes a resistance point rather than a support point. So the stock has to work hard above it, and it often drops back down. As you can see here, it got above it briefly, but then stayed around it. So it's something we're watching MU to see whether it's doing that or not, and
absolutely,
we will jump in. There's huge amount of potential in the memory stock still, so I can see us going back in there sometime.
And again, it's not a problem that we've been into a stock and going out of it. Doesn't mean that we don't get back to it. So in that sense, it's nothing about feelings or anything. Questions always welcome, especially over the next couple of days. We're going to do an hour webinar tonight, 7 o'clock Central European time. Liam Flavelle is up in English. Hans-Henrik is lurking around, and we're going to do it tomorrow again in Danish as well, because we know that we have a lot of viewers, both international viewers and Danish viewers, who would like to get their questions in. We have some. You can write us at our email, always, FOMO@MyStockScanner.com. Please bring us your questions, and we will take as many of them as we can tonight. We can't promise to get through all of them. We're going to be talking Scandinavian stocks as well. I promise you, tonight we won't be talking Pokemon cards. And the reason for it is its number of the day, $16,492,000. You don't get the chain, you only get the card. I have to emphasize that. That's Logan Paul. He bought that
I
card.
thought it was Hans.
Yeah, it is Hans when he's done working out. No, Logan
Was
Paul
that the
bought
cat
this
on my
card.
head then?
Logan Paul bought this card back in 2021. Back then he paid 5.3 million for it. Now he sold it for 16.5 million to the guy in the middle here. His surname is Scaramucci. You think you've heard that name before? There was a communication director in the White House called Anthony Scaramucci. That's his son. He doled out $16.5 million for this little card. But gentlemen, in honesty, what an investment.
It was an investment. I would just say, look at the picture of them selling it. The guy on the left who's selling it looks a lot happier than the guy who's actually bought it.
Yeah.
The thing here is that when you do a 3-point playbook and you get to the first question, is this good quality? I know the card is good quality. No, but the fact is, this is a complete speculation. This is it could go to zero and it could go to a lot. This guy as well bought a ton of, what was it called? NFTs?
Yes.
And he lost, I don't know, he probably lost $5 million on that. So these black or white, red or black on roulette or whatever, these are complete speculative bets, and it's all PR for his brand.
I'm glad that it's the man who has Pokemon cards that say this somewhere on the shelf somewhere.
And swim Barbies.
And swim Barbies as well. Anywho, guys, we're coming to the end of the show.
I think we are.
We are on again tonight, 7 o'clock. Liam Flavelle, Hans-Henrik Nielsen, both going to be there. We're going to do it in English. If you have questions, FOMO@MyStockScanner.com. We're going to be looking at Scandinavian stocks. Liam is back on Thursday also with a show here at 1 o'clock in the afternoon. Hans-Henrik is back tomorrow at 12 o'clock in Danish. That's how we roll. You guys be careful out there and get some cough medicine for those coughs, the two of you, and we'll be ready tonight. See you. Have a good one.